My name is Paul Wallace. I'm the Africa editor at The Banker magazine, and I'm here with Daniel Berman, who's the head of capital markets for Africa at Standard Chartered. Daniel, thanks for joining us. In the last 2 years, Africa's debt capital markets have really blossomed. A lot of sovereigns have issued in the international markets for the first time, and demand has been huge. Can you just tell us what you think is the main reason for demand for African sovereign Eurobonds being so high? Is it simply that interest rates in the developed world are at record low, or is there a lot more to it than that?
Well, I think there is a lot more to it. On one side, obviously the low rates in the developed markets do mean that investors searching for yield look to new regions like Africa. But ultimately there's a more structural change which is going on. And that's largely to do with a large number of new issuers which investors have not had access to before, presenting viable investment opportunities. So these are rated sovereigns, which perhaps weren't rated before, state-owned enterprises and corporates also within some of those countries who have gotten to a stage where they present a marketable credit to the international investor base. So that's a structural change which is not really related to the low level of interest rates globally. Of course, the low level of rates assists, and it creates a huge amount of liquidity which is available around the world to invest in these kind of opportunities. But we think it's much more of a structural change which relates to the type of issuers that we have in Africa. And of course, those are new issuers, so they present diversification opportunities, and that's very important for international investors who ultimately have a quite mature set of markets outside of Africa and an entirely new set of opportunities within the continent.
Even though demand for African dollar debt is so high at the moment, supply from the continent is still very low in terms of the overall global issuance in the capital markets. Is that something that you see changing over time in, say, the next 5 years? Do you see supply from Africa substantially picking up?
We do. We have a very large number of discussions ongoing with our clients around the region who are now getting to a stage where they want to access the bond market. Ultimately, the international bond markets are the deepest source of liquidity globally, and there are a lot of issuers who have been working hard with us and with others to put themselves in a position where they can access that funding. And one thing that's important to note, it's not just dollar funding, it's also funding available in local currency, sold both locally and to international investors. So we spend a lot of time and have a lot of capital committed to developing these local capital markets, local bond markets, and that's important for these corporates because it means that they can also raise funding in their own native currencies, therefore avoiding large FX mismatches, and they can raise those both from local investors who are resident in each of the capital markets, but also from international investors who now for the first time have the opportunity to, for instance, buy deals in Naira, in Kenyan shilling, etc.
At least in the Eurobond market, apart from a bit of issuance from Nigerian banks and from some South African corporate issuers, supply has been dominated by sovereigns. But do you see more and more corporate issuers coming to the Eurobond market from Africa?
Absolutely we do. It's typical that the first issuer from a market tends to be the sovereign. That sets the benchmark. It helps investors gain comfort with the overall macro environment, and it gives them a pricing reference that they can use when they look at corporates. But the next stage invariably is for state-owned enterprises, for the largest banks and corporates to issue, and we've been very active in that space. It's something that investors are very keen to see because obviously once they've done the work on the sovereign and they like the story, it's a very natural step for them to want to buy into the biggest corporates and financial institutions.
You mentioned local currency issuance. Is it the case that when a country or when borrowers from a country tap the Eurobond market, that international investors also seek to access local currency securities in that country?
It does generally increase our interest. Of course, the state of regulations locally in terms of capital controls, the convertibility of the currency, how custody accounts, trustees, etc. work is very important. So some countries are better set up for that than others. And one of the things we spend a lot of time on in developing these local markets is working with the governments, the ministries of finance, debt management units to try to improve the accessibility of the local markets such that international investors can flexibly invest in them, because that's not always the case today. It's still a work in progress.
Daniel, thank you very much for your time.